Appreciate you joining today. We might get a person or two here. I got my math shirt on today. I don't know if you guys can figure out what the formula is, but
oh yeah,
my little Huey Lewis the News reference. I think I'm cooler than I actually am. You know, my wife will remind me all the time. She's like, "Your joke's terrible." You know. All right, so let's get rolling here. So I guess what I wanted to do was, I think it's. I mean, you guys tell me. I think it's been going well, showing like both bull and bear scenarios. I'm trying to be like less biased overall with like directional type of things, but I'm trying to like favor more like higher probability setups. And you know, like a classic case here is so like last week. Here we go. So last week when we had the webinar, I drew, you know, and I try not to change the lines just so like we can kind of get a, you know, line in the sand of like where you're right, where you're wrong, that kind of thing, but not necessarily focusing on that. It's more about like, now that has happened, what is typically the next path? And that's what I like to try to emphasize to people is that, you know, markets are, on the surface, it's seemingly at random, but if you understand like liquidity flows and, you know, volume and positioning and covering and also, you know, the whole ball of wax, that's kind of like where it helps to kind of do like a review of, well, here's what you're thinking last week. Now that we've got another week's worth of price action, now we can reinterpret what's going on here. So I just wanted to show, like last week, I kind of thought we might have, you know, like a wave 3 or like a continuation. So something sort of like this, where we would have a reversal and then we would have like a larger wave 4 and then back up. But that didn't really happen. It ended up being like this It ended up being the ABC scenario that we ended up talking about. So you know, this trend line breach is a big deal. There was 2 of them, you know, the last couple of weeks. But now what makes a little bit more sense here is to kind of take a look, and I'll kind of redraw this. But now that we've had this, I'm sorry, again, I don't know what's going on in my throat. I seem to have this problem every time. Probably because I don't talk all day, and then I talk. Here. Okay, so when I was showing this before, I feel like the S&P is a really good example of like a textbook, like a textbook ending diagonal. And these things just take forever to mature. I mean, it started in November, and now it's February, midway through February, and if this does continue on its path here, you know, highly likely it'll be, you know, March before it can, you know, resolve. So I guess, you know, like the one thing I wanted to say today was that there are short-term moves and there are long-term moves. Short-term moves are, you know, for people that like to trade them, you know, like swing trading, like they can be very profitable. To understand that, you know, let's say we have a 10% pullback, like you can make a lot of money if you know how to play it. But for some people who don't really want to do that, they just want to leave things invested and just rock and roll. That's where like the larger corrections, I think, are more important for everybody, or like the larger setups for corrections are more important for everybody, because that's where I think you'll make, not just like make a ton of money if you know how to do it, but if you just skip it entirely, either by going to cash or, you know, you don't even have to actively short something. You could just, you know, sit and wait, or you know, kind of follow like the sector rotation. So for example, like consumer staples are down, right? So, you know, like I always get crap for buying Campbell's soup, but you know, or like you know, Kraft Heinz and stuff. But you know, there's really like 10 companies that like globally that make like the world's food in cans, and you know, and all this sort of stuff. And it's still an important industry, but it's just not a very attractive industry. It's not like tech, right? It's not like buying a rocket company, you know. It could be boring. But you know, a lot of those companies pay dividends, they, you know, whatever. But the long story short about it is, like, when you see a sector rotation, that's where you can see a lot of those when you have these sort of ending patterns. Technically, this is called like an ending diagonal, at least like kind of what it looks like today. And you typically see like 5 major waves within it. And typically in the last wave here, you know, this is why I keep drawing this like ABC pattern here. Well, that's a contrast here. But typically, you'll see some sort of like last like wave 5, and the wave 5s can move pretty fast, because usually the more experienced traders can see that this is, like it kind of confirms that longer term, this pattern here is probably these are probably gonna be the highs for a while. I mean, nobody knows if we're going to have if this is the end of a wave 3 over the last couple of years, and then we start a choppy wave 4 for the next couple of years or something, or who knows, or a year, and then we make a higher high eventually, but it takes forever. So the important thing to take away today, I guess, before all else, is that again there are two types of these ending sort of patterns. Like one is the short term, where it could be like, a wave and a larger wave up, that kind of thing, where it's just brief. It could be a couple weeks, it could be a month, whatever, and then we just get right back on track. But at this point, we're already starting to see major sell-offs in stuff like silver, gold, and many, all three crypto, sorry, not crypto, but like, metals and equities, they were like tied as a pair. And that doesn't typically happen. They're usually like inversely related, because one is usually like a hedge for another. So once you start to see major bubbles in a lot of these different like asset classes and a lot of these different sectors, that's where you want to try to think about getting defensive. Like right now, I really don't think there's a lot of like risk reward trading the indexes. I actually think it's kind of like a waste of time right now, because they get a lot of attention, but it's also still an aggregate of everything. So just as an example, like if I were to show, like some of the other stocks that went straight to the moon, right? But if I show something like, just as an example, like if I show XLF, I mean, it's just been on a rip ever since the dawn of time. And, only had like a very brief correction, but it hasn't really done much for a while. But then when you look at, some of these other stocks that are beat up, hold on, let me go to, sorry, one second. Let me make sure I get the right thing here so I can actually speak somewhat intelligently. Oh, here we go. So for example, if you look at something like Campbell's, let's get all this crap off here. So if you look at something like this, you can see that it's been grinding downward for quite some time. And it's one of those sort of depressed stocks, but there's a lot of volume and they keep beating earnings, and it's a fundamentally strong company. So I mean, that's why it's an attractive sort of investment. And also you're getting some of these like these longer term buy signals. This chart is set on weekly. Sorry, go ahead. What was that?
Oh no, I'm sorry. It's
so these blue numbers like 9, 8, 13, numbers don't really matter that much, except for like when you see A13. A13 is like the trend has been extended much farther than normal, and so it's almost like using Bollinger Bands too. It's like it's gone beyond 2 standard deviations or 2.5. Like then it's a trigger that okay, it's probably oversold or overbought, that kind of thing. So there's a lot of stocks out there like this. And if you look at so was it like Roblox? So like stuff like this where there's not a lot of chart history, but you can still see, you're starting to see some buy signs out here. Like I still wouldn't, even though I did enter here, I'm looking for maybe like a little bit lower of a low, and you'll probably get a buy signal for that. And also like more of these food producers like Kraft Heinz. And if you ever want to get like a quick litmus test of whether stock is like over or undervalued, you can use something called Graham's number. So Graham's number is it's a really easy way to like essentially fundamentally value a company. And it just takes outstanding shares divided by book value divided by outstanding shares. And that's pretty much what you get. So like, Kraft Heinz is, I mean, you could start to see a lot of buying here, a lot of volume making up as it kind of, has all these buy signals that are triggering. And you just have to wait for it. But to try to, tie this back to like sector rotation, these are not hot stocks. Like, you don't hear about them on Kramer's spin room or whatever the hell it's called. But these can be money makers over time if you time them right to buy in as they've kind of gotten underneath like their actual like fundamental valuations. Because I mean, you look at something like Nvidia, it's still 16% of US GDP. 16%. It's huge. You look at something like Kraft Heinz, like they produce they produce tons and tons and tons of food and they feed millions and millions of people, but their stock is, almost half of what it should be worth. So I guess when I'm talking about like longer term investing and kind of like trying to time, bigger cycle tops, this is where I think it's really good to start looking at companies in like depressed sectors. So I think it's really good to look at companies that are in these, the depressed sectors and try to, if you want to look for like more longer term returns, a little bit more stable of an environment where it's not so volatile. So, been right like crypto. So, again, that's kind of why I've been trying to pick up some of these where you look at like Conagra, you're starting to see some like good support here, a lot of good buy signals. And this, it's been kind of beat up for a long time. And sorry, I know there's a lot of crap on here, but it's also trading at $7 below its book value price. So that's just like a quick way to kind of take a look at some of these things. You could also take a scanner, like and if you guys use like TrendSpider, it has a great scanner. You can also code or not code. You can do like no code bots, that kind of thing. You can just kind of type in some triggers, like if you have a trading style. I think it's really cool to do that stuff. But so the long story short here is that I guess when you're looking at a chart, when you're looking at indexes, when you're looking at something like this where you've got nothing but up for forever, and then you're starting to see just diminishing returns for your dollars. This is kind of where you might want to think more defensively. So if you don't want to actively short or you don't want to do whatever, it does kind of seem like we're moving towards this more like longer term top. And we still don't know whether it's going to be, again, like wave 4. I could still model something like that where we don't know whether it's going to do something like that and then kind of do this for a year. Who knows? But I guess just looking at this overall, I mean, even from April, if we had a freehand in this one second, but even if we had I think it's more dramatic with the Nasdaq. I think it's like 60% or something, or not 60%. It's a lot. But 30% correction takes you to the bottom, of last April. So it's not even a year ago. And I mean, that's insane. Like that's how far this market has traveled. So, Tiff, I know you had asked about shorts, and that's just a reason why I want to hold, is because I do think we're getting very close to some sort of like big top, and you can usually tell because there's a lot of distribution, there's a lot of volume, there's a lot of like jockeying for position. Like if I zoom in on the chart here, you can start to see that you have like a lot of volume trying to catch the knife here. So this is bulls trying to stay at the party as long as possible, keep driving it up. But also this behavior is it really kind of points to covering. So if you look at you look at a lot of this a lot of this buy delta distribution here, you see a lot of it is right around this zone, but you can also see that you've got a lot of sellers up in this top band. And as you kind of zoom in, like as the pattern kind of matures a little bit and people kind of think, okay, and it's not really going very far, so we'll also sell some stuff too, and maybe we'll buy back later. You also start to see you have a kind of a different profile here. And the profile is, I was kind of doing some research on this. Like you go back to 2008, you go back to 1999, you still get, like when you do have these longer term sort of consolidation patterns, you do have more buying than you do selling. Like even though this is clearly selling, you can see a lot of higher volume sells here, a lot of profit taking, a lot of attempts to probe for buy support, that kind of stuff. Just all the different tricks and things that these institutions do as they're doing opposition research, I guess you could say. But I guess like again, to try to tie it back here, the main takeaway is that we're kind of getting closer to the end of this pattern, and every time like a trend line is broken, I call it pattern expansion. Like for a while we were looking at something like this where it was a kind of like a tight triangle, but if it's a like very, very bullish market, you'll see breaches to the upside, not the downside. And also too, like experienced traders know what an ending diagonal is. So this is very clearly an ending diagonal, but it doesn't necessarily mean that it's going to wrap up soon. So again, like this could take us out to March or April even, for this to resolve, and it could even, probably maybe 7,100 if this bullish scenario does kind of play out. So I guess short term, I am expecting like a little bit of a pullback. Excuse me, a little bit of a pullback, but really kind of like right here, like the 68.50 level is, I think can be super important. As you can see, there's a lot of sell delta at this level. There's also a lot of sell delta at this 69.50 level. So it's just low enough where you're not getting this pressure to defend the 7,000 level. Like market makers don't want to be super long, at the 7,000 level, because they can also see it too. They have to take the opposite of each trade, and if everybody piles into puts, they have to go long, and they're left holding the bag that they essentially created. I know it's kind of a weird cycle, but the dealer hedging dynamics, I think, are really important right now. So that's why I try to, like, if you guys take a look at the options channel in the Trading Gains platform, where I in the morning I'll post like, here are your levels for SPY, here for QQQ. Also the 0 DTE information that changes throughout the day, but I've noticed that the skew is a little bit more put heavy recently, and kind of like I said before, like you should see 5 ABCs in this sort of pattern. Sorry, 5 sets of ABCs at the larger term. So this is still the bullish sort of projection, but you also got to kind of combine some other things together. Like today, this morning, we saw we just kind of saw general weakness. Like pre-market this morning was great, everything was up, right? And then as the second bell rang, then sold down. What was it, like a percent, 1.2%, something like that with the Nasdaq. Well, part of it is because jobs were revised. Non-farm payrolls were revised, where we had net negative jobs last year. Surprise, I'm not surprised, but surprise. Even though like top line beat expectations by slightly less than half, but it's almost like that was you're reading a book by its cover, not necessarily understanding what's happening underneath the surface. So I think that a lot of people are starting to get a little bit worried that the AI trade's looking a little shaky, even though stocks keeps going to the moon. It's still like, if you look at something like Nvidia, sorry, this is the wrong chart, but if you look at something like Nvidia, this looks like a Head and Shoulders to me. It kind of looks like all the liquidity has been sucked out of the system. And I think I said this last week too, where it's like at this point where we've gone so far, where we've been pinned in this region for a couple months now, and there's just like the liquidity flows are not positive for Q1. So typically you see some selling in Q1, and that's not an accident. It's just kind of how things work with like the Treasury General Ledger and all these other things that'll put you to sleep if you talk them through. But I guess you could say, part of my job is to kind of read the tea leaves here and kind of present like, okay, so this is the bullish scenario. And then when you flip to the bearish scenario, like what do you think is going to be the magnitude of the move? And that's kind of what I'm trying to convey here, is that short term, sure, we may have some dips, we may have some or like a B wave dip kind of thing. We may have a buyable dip, but really this is kind of like my bifurcation zone, where if you see some selling beyond this line, highly likely it's going to continue lower, just because you got a lot of again, like you're wrapping up a pattern. I have seen in the past, I've seen some patterns where I'm going to take this off here for a second, just for illustrative purposes. But I've seen some moves where like it doesn't make a fifth wave, and that's called in textbook Elliott, it's like a failed 5. But even though it has been a very bullish market, I don't think you're going to see a failed 5. I still think it's going to kind of play out, and then it's going to roll over in a big way. But that's still temporarily. We don't know what's going to happen yet. So when we had this first kind of touch and then pull back, like that was kind of easy to read, that there was going to be an ABC. But now that we kind of broke the lower trend line, now what we want to look for is, if it kind of bounces like this, looks weak, and then continues lower, and then kind of bounces like this, watch for that, because that is going to be a pivot point. It even might go up here for an hour or two in the day and then head lower. But if you see something like that, that's going to be now your third trend line lower, which which typically means that you'll probably get a visit to your 200 daily moving average. Does that make sense? I'll stop there real quick.
Yeah, that does make sense.
Okay, my squiggly lines worked. That's good. All right, so now what I'll do here is I'll show the S&P. Sorry, not the S&P, the Nasdaq. So last week, like I said, I was thinking maybe we would have that one little stab down and then kind of a more of a consolidation of a wave 4, but that didn't really happen. What we're seeing here with the Nasdaq is still weakness, but it wasn't quite ready yet. I think what we're seeing here is kind of like the S&P. I think that there is some room here for like a small pullback, and then maybe like another, you guys ever hear of a Pyrrhic victory? It's like, yes. So I think like, the incremental move here that we're talking about is going to be a very volatile sort of ascent, because again, a lot of traders know that this is an ending pattern, and you're going to see a lot of aggressive selling, and the bulls are going to have to work for it. But when you zoom out and you start to look at some of these other patterns, I mean, we've kind of, in prior webinars and stuff, we've talked about like the different wave counts and stuff like that. Like, where do we think we're at? I do think that this is like the end wave 5 of this huge rally that we had, off the bottom in April. And after that's done, you gotta pull back some, because I'm sure these guys are running on inventory. They're again, there's still buying up here though. So you do see signs of reaccumulation, but I mean, it's like if you're buying billions of dollars of the S&P 500 at 7,000, like that's, to me, that's not a very good investment. To me, that's like you're buying a top. Why not just wait a couple months, and then you can buy it a little bit lower, and then if it goes back up again and makes a new high, great. But if you're within about 5% of a top, why don't you wait another 10, 15%? Because, again, Q1, we have a lot of liquidity issues with this quarter specifically. So this is also where I kind of look for traps too. I think in the last couple days I've been talking about like bull traps, like up here, I think when it rallied up pretty high at the end of January, or maybe it was this February 3rd rally. Usually what you can see is like a day where it rallies, and then the next day they'll do the opposite, and sometimes it's news based. But I think, again, what we're seeing right now, this is like it kind of has all this hallmarks of like a B wave. And what I mean by these B waves, and that, I'm just trying to say this for all the people listening at home or, whatever, later tomorrow morning, is that typically what you want to look for with these B waves is, you look for volume. So like volume concentration. So for example, you can see there's a lot of sell delta up here, especially right around this sort of zone. And we've been up here for about 3 days. So that's enough time to accumulate a pretty large short position if you're going to actively move the market. And now that this larger pattern's become a little bit more clear, now you start to see a little bit more of this sort of behavior out of large institutional traders. So today, like, if we're looking at the just a kind of a short-term view here, if we're looking at the price action, this is also a pretty predictable sort of pattern here, this ascending wedge, but it happened like all day. So it was a boring day overall, but what the bears are doing is they're distributing. So they're selling shares here, they're selling it down so we don't make a new high. So let's say, they've probably accumulated some short positions that they don't want to see in the red, but they'll let the bulls buy it up because they want to sell into strength. And it's not really strength, right? It's just they want to sell into the bulls are going to buy, why sell lower when you can sell higher? So that's kind of what the logic is behind here, where as I'm watching this throughout the day, and this is kind of why I try to pull some charts and stuff. And I know this is very, very micro, so maybe I'll go up a click here, but like the reason why I post this stuff is because if you're I think TF, you asked us a couple days ago where there's a lot of like short positions that are underwater. Like, where do you know when is a good spot to either add shorts or like add to a position or close up some longs. And that's why I try to focus on some of this stuff here because, because I mean, I don't know who has what for positions, but I do know that once I see like a consolidation zone here that's primarily bearish, that's where I want to call out and say, highly likely, this is probably like a small interim top. So if you want to do like a short scalper or something like that, or if you want to do some short positioning or something, like you can add a small bite here, but you could do it via like stop. So I think I had it something like this the other day, where it's like if it goes below this, then you can add a small short position or something like that, be a limit order or stop, or however you want to execute it, because likely it's probably gonna do something like this, where it's where it kind of comes down and tests that trend line again. Now, I do want to say that there is a possibility that kind of zooming out here, there's a possibility that this sort of bullish sort of wave 5 here doesn't really materialize. And I want to show you guys. I don't think I was able to complete the thought before. I'm sorry, I'm all over the place, but I normally am. I have ADHD, lots of it. So what I typically look for with these pullbacks is I want to see if like the 0.618 has been hit, or even slightly a little bit higher. If you look at something like the S&P, it's definitely gone beyond what you would call like a typical like wave 2. But I've been seeing this a lot. I've been seeing this a lot. I'd say probably in the last 6 months, where this 0.886 level has been very significant for reversals. I was doing a little bit of research, and sometimes like the correlation between different like retracement levels, it changes over time. And I think that's also because traders like to program their algorithms, and kind of mess with people a little bit. A lot of it's liquidity based, a lot of it's stop hunting and stuff. But anyways, long story short with it is that what I'm thinking here is that that it kind of shows you the bullish scenario, right? But the bearish scenario, I don't want to go like too extreme right away. I'll do like bearish scenario light right now. There is a possibility that we just saw like a double top, and what you could see is like a C leg extension down, and that would change this. So, a double top. I think my kids are making weird noises behind me, but you can see this. You see this sort of like double top situation here. I think I had this line before when I was showing that like that 5 wave series down. Well, this is just another version of that, where it just goes on to test the goes on to test this this 200 daily moving average, which is this turquoise line. So this is sort of like your bearish light version. Yeah, so just freehand here. It'll probably take a little bit of time, but it maybe 2 weeks. It could take something like that to develop. But this would be a good viable dip, because usually you'll get some support there, and you might get not you might, like if this happens, then the next step, what you do here is you kind of retrace it up, and what you typically focus on is so if there is like again this big sort of pullback here, you kind of wait until it gets back up as in a retrace back up at this 0.618. Yeah, I'll zoom out here, and then this like the first wave down, I think is really what I'm trying to show here, is that you're never really sure. Like the first wave down is always the most difficult to forecast, and again, like I do not think that this is going to happen right now, but all I'm trying to do here is just illustrate that like at this 0.618 level, that is typically where you look for pivots, like wave 2 pivots. If it's a ABC, and again, come to the webinars and stuff, like we'll do it week by week. But if it's an ABC, sometimes you can see reversal like at the 50, or usually if it exceeds the 50 and it goes up to the 0.618, usually that's usually that is a wave 2. So like hold on to those shorts, because it's probably going to be a bit of a strong one. But again, so to kind of recap, like where we've come from is we've got this monster rally from April. We've got we've got a lot of grind here. It definitely looks like some sort of wave 4 or an ending diagonal. I'm leaning more towards ending diagonal. So I think that we might see, again, just like one more push up, but that kind of completes that fifth wave. And then you see this, you see the larger correction. But again, it's still dangerous to like just go long here and then cross your fingers, because, well, one, I think there's been enough accumulation here, distribution, where you'll see a lower low, relative to what we saw like last Thursday. And then don't forget, crypto sold off 12%. So, like last Thursday or whatever that was. I mean, that's huge. And people have the memory of a goldfish. So, that means that there's some sort of systemic problem that's happening underneath the surface here. Like, people are de-risking. Why? We're not sure yet, but I'm sure we'll read about it in the news after they're all out. So I don't want to keep droning on about that. I just wanted to kind of give you guys a like a short term, and then sort of like a longer term view here about what's possible. I think that the Nasdaq is a little bit weaker overall, but that's kind of what's going on there. Any questions, comments, concerns before I switch indexes? Does that make sense, at least? Do I have structure now? Like, all right. Yeah, guys, if I sound stupid, you really gotta tell me. I did a webinar like two or 3 months ago where like I was just talking, and then all of a sudden they're like, "Oh, you're not sharing your screen." I'm like, "Ah," like I had gone through like the whole thing. Okay. Anyways. All right, here we go. So let me flip scripts here. Oh yeah, the other thing I wanted to show you guys too, just real quick, is just with the this is like an alternate sort of count. It's still for the Nasdaq, and it still has like the ABC up for the semi bullish sort of view. But again, I still think we just need to watch it. It's I mean, to me it looks like a pretty clear B wave. And now that we've been here for three days, kind of sitting around the same sort of 1% level, I think that there's been enough change of hands here where we should see some sort of down. Oh yeah, and also too, the Dow definitely needed to hit 50,000. So now everything's okay to sell. The S&P hit 7,000, the Dow hit 50,000. Now it's time to go. Anyways, the yield here, I won't spend more than just a minute or two on this. The yield, there, a couple of my bond trader friends. Yes, I have bond trader friends. It's kind of weird. They don't really talk much, but the bond traders are really, really good, and they have a really, really firm understanding of like macroeconomics that are impacting just the general market conditions. And when they speak about rates and what things are probably going to do in the next 6 months, I can typically take a lot of notes. And there's, I wouldn't say consensus, but I would say there's probably one level like this 4.100%, like where there's a good, probably like a good level for support. I mean, in my opinion, the yield doesn't really belong underneath 4% right now with the different economic conditions, but this just looks like a normal sort of pullback here. I think that there's some people picking up some bonds to try to de-risk a little bit. Again, it's all tied to the patterns and tied to equities. Everything else is sold off right now, so equities are next, and that might happen tomorrow, might happen 3 weeks from now, might happen 3 months from now, who knows. So we just have to be prepared for that. But what we can do is we can continue to read the different signs from around the different sectors here. So for EMV, I'll be adding some once it heads back down here, and that's an if. It might not even get that far down, but again, I think if we have some sort of melty Thursday or Friday this week, we might be able to probably people I can't talk. Probably people will pick up some bonds, and that might drive down the yield. But it depends on what happens with that, because still not a lot of appetite out there for U.S. government debt. It's kind of like driving a new car off the lot. It immediately depreciates as soon as you buy it. All right, so let's look at gold. It's not a shot at anybody. Remember when they came out with well, not remember, but when they came out with the TIPS bonds, the Treasury inflation protected securities. I mean, have those things ever paid more than 2%? Anyways, like when you get a bond as a kid from your grandma or something. All right, jokes aren't landing today. I'll stop. Just laughing at myself. All right. So for gold here, I think Tim had a question today about it, and as I was kind of looking at this chart, you could probably see something like this form where probably see like another little B wave here, another little sprint up higher, and that I think that depends on like just the level of risk that people have an appetite for. Like gold's a lot more stable, I think, than silver is. Like when you flip to silver is just generally more weak. I don't know. It's kind of hard to explain. It's like, in my opinion, this looks like it's like actually it's like a descending wedge, or like like an ending diagonal, but it's on the bearish side. So kind of like we're talking about. Oops. What did I do? Kind of like we were talking about the S&P before, where it's kind of ascending and kind of getting a little bit weak. This is where like it's probably not an ABC. It's probably more of like one of these things where it just kind of deteriorates over time, where it goes into some sort of like consolidation pattern that ends up being like let's say it's like a test of this 200 daily moving average. Now I think it just kind of depends on like what gold does, what bonds do, what the yields do. But I think that the important part is that the bubble has popped, and now that that's popped, people are going to try to buy the dips and buy the lows and stuff. But I actually think silver might be a good long if if we get down to this like 72, 75 level. I think it's possible you could see one of these guys, where you see like a bounce up and it's like an inverse head and shoulders here, and it kind of depends on like where gold is, because they kind of trade as a pair now, and I have some more research to do on this end. Like when we started the call, we talked about like the covariance with like the S&P and Bitcoin and stuff like that, and how it was really strong, back in like September, October, but it hasn't really held up over the winter time. So it's like the signal that was really reliable before is no longer as reliable, but that just means like the regime is flipping here. It's like there's a new like mathematical base that these things are trading off of now, and we just don't know it sometimes until it's too late. Okay, so let's look at oil. So oil, I don't know how accurate this is, and this is all hearsay, but sometimes when you speculate with stocks and stuff like that, sometimes, buy the rumor, sell the news, right? So I was reading an article that there's like a whole ton of these, C-17 planes that are all flying in the Middle East right now. I think we have like 117 or something like that in the fleet. So I don't know. Who knows if something's going to happen about it? But in my opinion, like I see a lot of buying here, and I've got a pretty large long position. But my opinion on the matter is, oil's been sold down so long that it's about time that the oil bulls kind of spike the ball on the bears here, because they've been getting a little lazy. Just like sometimes in a long downtrend, the bears get a little lazy, and then the bulls do like a big short squeeze. We saw some of that here when there was the Iran bombing back in June. So from what I read, it just kind of looks like it's normal sort of intervention in the Middle East, every 6 months. But I don't know. I'm kind of getting the feeling here that it might continue up. I'm not going to add shorts, but I think probably what I would do is, if you are long and wanted to add some shorts, I would probably set a stop here or something like that below the 200 daily moving average, because right now it's kind of been consolidating above it. And if it does flip, then most likely you'll probably head back down to like 58 here. All right, natural gas. So this one, the chart's getting a little weird here. I think the contract flipped. But the natural gas chart here, I think it kind of looks a little goofy, but it does look like a little bit of accumulation. What I've noticed with gas is that when you have a divergence in volume, typically that, whatever is trending. So right now it's kind of a bearish sort of slant. Wherever it's trending typically reverses to the opposite direction. And that's, in my opinion, like when you're seeing a lot of selling, it's a convergence of price and volume. Whereas, you see a divergence when you're on the bullish side, where you see like lower volume and higher price. So that's kind of that. So stocks, I think here, stocks is probably going to hit a new high here, but I think this kind of looks like a wave 4, and this sort of looks like a 5 wave up here, but it'll probably extend a little bit higher. So if it does that, it makes a new high that qualifies as a 5th wave, and then I will probably add some stocks and increase cost basis for that position, a badly wounded position, but there will be light there. I'll do Bitcoin and MSTR last. Let me do Nvidia here. So Nvidia, this guy, I still think this is kind of like sitting right at the top of the cliff. Earnings are coming up. It's not going to drop before then, but with how earnings have gone recently with like Amazon and Microsoft, like these guys have been getting hammered, like 10%, like holy cow, like people are taking profits, guys, a lot of profits. So just be aware that it's once you see a 10% sort of move in a stock, it could be devastating if you have like $100,000 with Microsoft. That sucks. That's a bad day, especially if you have options or futures. Well, futures on Microsoft, but anyways, but yeah, it's just kind of stalled out here. So Tesla is doing the same thing. Right now, I think it's going to try to test this little pattern it broke out of recently, and I think it's going to go back down and highly likely this is just a B wave, and it's going to probably head down and test this bear target too. I'm going to ask Eamon what he thinks about this because I know he follows Tesla really, really close, and I think he's leaning a little bearish on it, but he's more of a longer term kind of guy on that. But for me, short term, I think that you'll probably see at least like 380. All right, so now let's talk about Bitcoin. So Bitcoin, this guy, sorry, Ben, sorry. It just kind of looks like here, it really looks like a wave, sort of pattern here. And longer term, it does kind of look like it's just like a normal ABC sort of corrective pattern. Now there's no way to really, I guess, tell for sure whether it's going to be like an apocalyptic sort of rip down. And I don't think it is. I think there's been enough buying and enough support at this level here where I think that this is kind of like it's like a new line in the sand. So anything below this is definitely bearish. Anything above it is bullish, in my opinion. So like if you're targeting, let's say you want to do a buy. Okay, so let's look into that. So you want to do a buy. Let's see, drop here. Let's see, it just kind of hit that 50 today. So you could potentially see, just for illustrative purposes, you could potentially see like a bounce at the 50 and then heads up a little higher and then rolls down. We don't know yet. Sometimes I think like you could see like this would be like a wave 2 and like a 3, 4, and then 5. And then that would be like a solid bottom. You'd have to look for a lot of volume. And actually kind of, I think it actually is, it looks a little bit better in the MSTR chart because they kind of trade as a pair now. And, just looking at this like longer term, I think this is actually probably the best view where you see this really long C leg down. And it kind of looks to me that you've still got this like, 5 wave sort of structure here. And I think it's just a really, really long ending diagonal where the price is just compressing. Now you could see some more pattern expansion again, like a little bit more elevation there. But I still think you might see some bopping around here. And if it ever gets this low, and it might, if it ever gets this low, I think you'll see a pretty big rally. Just because it's you've got some oversold here. I mean, yeah, earnings always suck with MSTR, but it's a speculator stock. So what I'm trying to do is I'm trying to get out of MSTR in general. I think people are struggling with that one. I mean, it's sure you can make a lot of money on like SMST and MSTU and stuff, but it's a very volatile stock. I think that the odds of getting trapped there if you're not as experienced of a trader but just don't want to make money. Like there's easier ways to do it, I think. So with that being said, I'm still trying to get out of it here, but I also want to try to play the I also want to try to play this kind of corrective move. Like I don't want to hold on for shorts, or I don't want to hold on to shorts for too long because it's going to, you know, then you know you can get creamed. But I still don't think it's probably done yet. There has been a ton of buying off the bottom, but you know I just added like a 50% hedge here, so I think it's below like 120. It might go a little bit lower than that, but you could then see either another big bounce off the bottom, and it might not make a new low. Not sure yet, but that's kind of what I'm thinking here. But to kind of go back to Bitcoin, I guess the final thoughts on this is so like, okay, where could it go? So I'd say probably like worst case scenario here is probably what you're looking at, where you get this like 5-wave sort of trend here. You know, since this wave 3 kind of, you know, in my opinion, like it stopped. Not very far down. Like, yeah, I mean, 12% sucks. That's big. It's a big drawdown. If you're long for that, but you know, wave 3s can extend double. So they could get a lot more scary. But I think that there's enough people that hold Bitcoin where, you know, it would take another true panic here to have it all sell off in a big way. So in my opinion, I think you know, all this stuff will kind of go down together, like Bitcoin, metals, you know, equities. Equities are really the only thing that's just holding the torch right now. You know, lone man standing tall at the hill. So, okay, that's pretty much what I got today. Any questions you guys have, or anything that's not clear? Anything you want me to comment on? Any jokes you want me to never tell again?
No, that was really good.
Okay, cool. All right then. I guess that's it for today. And thanks, guys. I appreciate the attendance, and you know, just let me know if you guys have any questions. I'm happy to answer them.
Okay. Have a good night.
Thanks, guys. See you later. Bye.
Bye.